Hope you guys are having an incredible day. In this video, I want to talk about two cheap stocks under $10. This stock, Under Armour, is at $6. The second stock that I'm going to be talking about is $2. In this video, I want to go in very in depth to help you guys fully understand my perspective when I'm looking at the full analysis, stop loss, and price target, and really the chart analysis for these two stocks. If you guys enjoy content like this, make sure to subscribe with notifications on, and make sure to leave a like if you guys find value in content like this. And then if you guys have not already, SundayStockTalk.com. We have been absolutely killing it. SPY bounced off the support, QQQ, Microsoft, gold. We didn't play gold because it did not break 222 at market open. But let's get started with these two stock setups. The first stock is Under Armour. Okay, you guys know of Under Armour, but I really want to talk about this chart. Absolutely A+ setup. The price is $6. We're going to be playing shares on this one. And the best part about this is we're risking 10% to make, 30% at least. We're talking about a 34% gain at least, and then potentially a 70% or even higher. But I really want to keep my expectations low and just play the bounce off the support to the resistance for a 34% gain, and then have the stop loss close below the support, so that's going to be a very nice 10% loss. So risking 10% to make potentially 34% and even potentially 70% on that. So the idea is very simple. We are sitting at the low, the absolute low for Under Armour stock. Very similar play to our previous plays like Macy, like Roblox, like Disney, where the idea is that we buy the low, the lowest it has ever been, and then we play the bounce, and we have the stop loss closed below. So taking a look at Under Armour, it is a very nice $6 stock. Okay, this is my favorite part about it, is a $6 stock, so we can just straight up play shares, and it also moves quick, so we can get that 34% gain and whatnot. So we're taking a look at the monthly time frame, the lowest it has ever been since March 2020, which was the COVID level. So we are sitting at COVID level right now, and the basic idea is we are buying the low and we want to sell the high. So this is the monthly time frame. Let's take a look at the weekly time frame right here. The weekly time frame looks even more clear. It looks even more better. So we're taking a look at the weekly time frame again. Look at how we are respecting this level. Okay, we're talking about this is the COVID low. Okay, we are holding this level. This is going to be our stop loss. So we have earnings coming up, I believe, soon. Set a automatic stop loss, because if earnings come and then what if we drop like 20%, 10%, just have a automatic stop loss on your broker, and the stop loss is going to be below $6. So below $6, around, we're talking about below $5.83. So have the stop loss around $5 and 83 cents. That is a 10% loss. We're risking 10% to make an upwards of 30% at the least. So we're taking a look at the chart right here. Our conservative price target is $8.84, and that is going to be a nice 30% gain, 34% gain. But our riskier price target, if you want to hold on to a longer and play the long run, is going to be a nice 71%. But I personally just want to play the quick bounce and then sell it at $8.84. So I hope you guys are really understanding what I am taking a look at. Full technical analysis, our stop loss and whatnot. And we could see that, again, we're just buying the low, we're selling the high. What is the probability that we go lower? If we take a look at the daily time frame, the RSI is also, coming lower, and it is looking good. So if Under Armour comes back at this level of support, if we have another red day, I want to really snipe the bottom, because this is going to be the perfect entry for Under Armour. So that is what we are taking a look at for Under Armour. The next stock that I'm watching is BLNK. So I'm actually already in shares at like $3.20, but I want to buy in more, and I only had a very small position, but I really want to add on to this stock. So BLNK, the thing why this stock is very interesting is because Ken Griffin, Citadel, one of the biggest hedge funds, has bought into the stock. So that was the main catalyst. With Under Armour, we know it's Under Armour, it's a pretty big company, but this stock, the only reason is Ken Griffin and Citadel, okay, one of the biggest hedge funds, one of the richest guys in Wall Street in hedge fund managers. But other than that, it's going to be based off of the chart. So BLNK looks very interesting. Now, I want to start off with the bigger time frame. I know I did make a video on it, but okay, it looks even better now, and we are on a daily setup. So let's take a look at the monthly time frame. Overall setup, it is the lowest that it has ever been. The stock is a little bit wacky. Kind of ignore the past right here, but this is pretty much a EV charging company. Okay, just keep in mind of that. So we're taking a look at the monthly time frame. It is the lowest it has ever been. Monthly doesn't look too good, besides that it is again at the lowest that it has ever been, but the daily and the weekly is where it gets interesting, and that is where I want to place my stop loss and my price target when we take a look at this closer time frame and closer picture. So we're taking a look at BLNK right now, and we can see that we are trading sideways and we are consolidating, and we have two levels right here. We have $2.22 right here. This is going to be our buy, and this is going to be our stop loss. So we want to buy right here where we are buying the absolute low, but then our stop loss is going to be closed below $2.22 on the weekly time frame. If we go back to the daily time frame, we could see that again we have bounced off of this level, and this is where we want to buy in, and this is where it is sitting at. So we are risking 10%. Okay, I would say have the stop loss at 10% to potentially make, again, 30% at least. Conservative price target 30%. Then we got 52%, and then we got 100%. But for both of these plays, BLNK and Under Armour, the risk to reward is absolutely amazing, and we are just following the chart. We are just buying the low and we are selling the high, and this is pure technical analysis. This is pure chart, this is pure price action, and that is the most important thing, that you follow through with the stop loss, with the price target, and all of that. So hope you guys enjoyed this video. Hope you guys really understood what I am taking a look at. Under Armour and BLNK, both two amazing great setups, cheap $6 stock, $2 stock. Hope you guys enjoyed this video. Make sure to subscribe with notifications on. Make sure to leave a like if you have not already, and SundayStockTalk.com for the free email newsletter that you can get right into your email newsletter. Hope you guys enjoyed this video, and see you guys later.